What if the most powerful financial decision you ever make costs less than a daily cup of coffee? Sounds impossible, right? But by the end of this video, I'm going to show you exactly how putting just $100 away every single month can completely transform your financial future in ways most people never even consider. Let's be honest for a second. Most people think investing is for rich people. They think you need thousands of dollars sitting around before you can even start. And that belief, that one simple misconception, is costing ordinary people millions of dollars over their lifetime. Today we are destroying that myth completely. Here's the thing nobody tells you when you're young. Time is worth more than money. Read that again. Time is worth more than money. You can always earn more money. You cannot earn more time. And when it comes to investing, time is the single most powerful force working either for you or against you. Let me paint you a picture. Imagine two people. Call them Alex and Jordan. Alex starts investing $100 a month at age 25. Jordan waits until age 35 to start doing the same thing. Both invest $100 monthly. Both earn the same average annual return of around 7%, which is a conservative estimate based on historical stock market performance. By the time they both hit 65, Alex has roughly $260,000. Jordan, who started just 10 years later, ends up with around $120,000. Same contribution, same return rate. The only difference is 10 years. That gap, that $140,000 difference, was not created by working harder or earning more. It was created purely by starting earlier. This is what people mean when they talk about compound interest. Your money earns returns. Then those returns earn returns. Then those returns earn returns on top of those returns. It builds on itself like a snowball rolling downhill, and the longer the hill, the bigger the snowball gets at the bottom. Now I know what some of you are thinking. $100 a month sounds easy to say, but where does that actually come from? And this is where most financial content gets lazy. They just tell you to cut out lattes and avocado toast. That advice is tired. Instead, think about it differently. $100 a month is roughly $25 a week. That is $3.50 a day. Could you cancel one streaming subscription you barely use? Could you cook dinner at home 3 extra nights a month? Could you sell one thing from your house you no longer need? Almost everyone can find $100 a month when they decide it is genuinely a priority. And here is where the psychology gets really interesting. When you automate your investing, something remarkable happens inside your brain. You stop seeing that money as money available to spend. Your brain adapts to living without it. Behavioral economists call this paying yourself first, and it is arguably the most important financial habit you can develop. Set up an automatic transfer on payday. Before you pay a single bill, before you buy a single thing, that $100 moves into your investment account. Future you is now always the first person who gets paid. Now let's talk about where to actually put this money because this matters enormously. For most beginners, a low-cost index fund is the answer. An index fund simply tracks an entire market, like the S&P 500, which represents 500 of the largest companies in the United States. Instead of trying to pick winning stocks, which is something even professional fund managers consistently fail to do, you own a tiny piece of hundreds of companies at once. Your risk is spread out. Your costs are minimal. And historically, over long enough time periods, the market trends upward. If you have access to a workplace retirement account like a 401k, especially one with an employer match, start there first. An employer match is the closest thing to free money that exists in the financial world. If your employer matches 50% of contributions up to a certain amount, you are getting an instant 50% return before the market even does anything. If a 401k is not available to you, a Roth IRA is an incredible tool. You contribute after tax dollars, meaning the money you put in has already been taxed. But here is the beautiful part. All the growth inside that account, every single dollar of compounded returns over decades, comes out completely tax-free in retirement. Tax-free. That is a massive advantage that millions of people are simply leaving on the table. Let me give you the reality check portion of this conversation because I want to be completely honest with you. Investing always carries risk. Markets go down, sometimes significantly. There will be periods where your account balance drops and it will feel terrible. The people who build real wealth are not the people who avoid those downturns. They are the people who keep investing through them. When prices fall, your monthly $100 simply buys more shares. That is not a disaster. That is actually an opportunity working in your favor. The real danger is not market volatility. The real danger is waiting. Every month you delay starting is a month of compounding you never get back. That is time permanently gone from your investment timeline, and as we established earlier, time is the ingredient that cannot be replaced. So here is your action step for today. Not tomorrow. Not when things feel more stable. Not when you feel more financially ready. Today. Open an investment account if you don't already have one. Set up an automatic monthly contribution of $100. Choose a simple, low-cost index fund. Then leave it alone and let time work its quiet, powerful magic. $100 a month does not sound revolutionary. It does not feel like a dramatic life-changing decision in the moment you make it. But 20, 30, 40 years from now, you will look back at this exact moment and recognize it for what it truly was. The decision that changed everything. Your future self is counting on the choice you make right now. Make the right one.